Good morning, Steve Freed with the Morning Grain Comments. Well, happy Friday, everybody. We have a long weekend ahead of us. Monday, we're closed for the holiday. We thank all the military who made the ultimate sacrifice and those that are serving now for our freedom. Overnight, prices kind of mixed to lower. The only markets that we see up is July corn and Minneapolis wheat. Yesterday, we had a frenzy of price movement on the upside with July corn up the daily limit, wheat following, and soybeans, meal, and oil also higher. Overnight, the Dalian futures, all soybean meal, oil, palm oil, corn, all higher, following U.S. And the European Matif corn contracts are also higher, following U.S. prices and reflecting a little tight corn situation, old crop there in Europe. As far as weather is concerned, the last 2 days, the midday weather maps for U.S. Midwest has put some ridging in the Midwest late June. The overnight is not as aggressive on the ridge and keeps it west of the Midwest. The one thing that people do feel comfortable about forecasting is dry weather in the U.S. Northern Plains, the Canadian prairies, and the Pacific Northwest. So that could impact final spring wheat production here and in Canada, and also the white wheat production in the Pacific Northwest. Soft wheat conditions are weighted above average. We might be getting a little too much rain in parts of the southern plains and could increase concerns about disease and protein level. But I think weather is going to be the most important thing, and early next week we'll be looking at the Pacific temperatures, water temperatures. The cooler they are, the higher chance of ridging. Right now the ridging may stay in the northern plains, but if down the road temperatures cool even more, that ridge could leak itself into the U.S. Midwest. Have to remember that 15% of the soybean acres and 10% of the corn acres are in the Dakotas, and the U.S. needs a 180 corn yield and a 51 bean yield to satisfy the demand. So the market's going to be very sensitive to any ridging that shows up in the Dakotas and even into the western Midwest. I don't think we've seen the highs yet of the marketplace, but it's going to be extremely choppy and extremely volatile, trying to decide where value is based on U.S. summer weather. We also note that we get our first crop ratings next Tuesday in corn, and anything above 70% historically has been favorable for the crops. 11 out of 15 years, that high of a rating, the yield actually was or better than the May USDA estimate. So you need extreme weather in those remaining years to drop the corn yield below the May guess. So we also note that we'll be getting some crush data. April's U.S. soybean crush 171 versus 183 last year. Soybean oil stocks a little over 2.1 billion pounds versus 2.6 last year. So we'll be watching the weather, we'll be watching money flow and outside markets. Do we have inflation? Are the Fed going to raise interest rates down the road? And what is the demand for commodities as we move forward? As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.